Welcome to all to our final 2022 agent webinar. Thanks to our loyal agents and audience members today for tuning in. Who knew that the fourth quarter, at least of 2022, is seminar, webinar, and conference season. So thanks for your time today. I know a good number of the folks who have registered for this morning's, or I guess afternoon session for most of the people on the call, are recently enjoying the Insuring Cannabis webinar that the Insurance Journal hosted that we all participated in at Cannasure. And then we unfortunately had the cancellation from the Business Insurance Cannabis Conference for certain conflicts that they had, but that was something else that was going to be big in our space. We know that we have today's session from Cannasure, which is kind of fun, but coming up in 2 weeks, MJ BizCon. So all these different cannabis activities happening in a very crunched amount of time. So really, again, thank you so much for joining in. Definitely want to say a shout out to the Cannasure folks who are online today. I never really do that, but it's fun having our teammates participate, at least in an audience perception, as well as having one of our teammates here on the call, which I'll introduce shortly. But speaking of the fourth quarter, we just sent out our fourth quarter newsletter, and I have no idea about how deep and broad our distribution list is. So I would really appreciate everyone to zip a note to info@cannasure.com, which is our marketing inbox, and ask for a copy of our fourth quarter newsletter. In it, we usually do a couple of updates on our recent successes, an interview with an underwriter, which this month's or this quarter's is from our sister company, International Excess, who does a big chunk of our commercial auto placement. We have other tidbits on risk management and spotlights on different carriers. This month, I believe it's Hudson on behalf of some of their coverages with D&O, EPL, and commercial auto. So a lot of things usually are happening, but the most important in the newsletter for this fourth quarter, which is why I'm bringing it up, is our annual agent survey. We would love to ask for a little bit more of your time over the next 30 days or so, and share with us your thoughts on what Cannasure is doing well, what Cannasure needs to do better at. There's a handful of coverages that are being asked of you on what coverages you place that you think we should be more robust in our offerings. But it's a pretty thorough 7 to 10 question survey. Shouldn't take 15 minutes of your time or less, but it really sets the stage for us to make sure that we're hitting the mark with the support we provide to you guys. And honestly, because of, I think, a survey 3 years ago, it kicked off this whole webinar series that we've been doing quarterly. You shared with us that you were seeking out more content, more education, and effectively more information from Cannasure. And that's what has been the launching point to these webinars. Housekeeping wise, so we can jump into that, we will share that there should be a Q&A button at the bottom of your Zoom screen. And if you could place any questions you have there, we'd appreciate it. So that allows us to memorialize it as well as to get to them all. And today, even though I'm running my mouth this morning on my side, we should have plenty of time to cover your questions. Usually we run out of time, which means we're providing a lot of content. This time, I think we kept the topics shorter, but I think really, really interesting. And with that, I'd like to introduce Kieran O'Rourke, our underwriting manager, who will share some insights on consumption lounges, which is a fascinating topic and one that's getting a lot of attention across the country. And Nathan Gunn, builder's risk underwriter from Great American, and he'll share with us his program's appetite and limits and offerings and the things he's looking for in a submission, and just giving us an overall perspective on builder's risk coverage in the cannabis space. And if you guys have questions beyond that as well, that's super. And we'll pop all those questions in the Q&A. So let's go. Mr. O'Rourke, please start it out.
Thank you, Jim. Pleasure to be here today with all of you. My topic is consumption lounges. This is the next logical step that the industry is making. I'm very happy for the industry making a move like this and being able to make a move, I should say. So it's, once again, our intrepid insureds and enlightened legislators and lawmakers that are making this happen. It really is the next logical step in the industry, and we're happy to be a part of it. Cannasure remains ready to respond like we do with just about anything that comes down the pike. So to answer that question, yes, we plan on being a player in the insuring of consumption lounges. We're just going to pull that book off the shelf called Underwriting Consumption Lounges 101 and get at it. Actually, there is no book called Insuring Consumption Lounges 101, but we're going to write it as we go. I say all that to say this is new, obviously. The term consumption lounge is used here because eating establishment and restaurant and bar and some of these other things were already taken, right? So, but in essence, this really isn't all that new. You have a place where people gather, they consume a product, and they leave, otherwise known as a bar or restaurant, right? So, but for the cannabis, if anybody has heard me speak in the past, you have heard me say this. If you heard me say it once, you heard me say it 100 times. But for the cannabis is our approach. We started this 5 years ago by approaching the whole package deal, the whole thing as, but for the cannabis, what do we have? And that made it a lot cleaner, a lot easier, and hopefully a lot better for you, the sales agents and brokers that are out there working with this. And so we plan on continuing that approach, but for the cannabis, we have a place where people gather, they consume things, they leave. And that should make it pretty doggone easy, really, all kidding aside. From the underwriting perspective, what are our exposures here? We have a premises, and generally speaking, in a lot of these instances, the insured's product and the insured's product only will be consumed on this premises. So, the product liability thing, we can talk about that first because it's probably the most insignificant part of this. The product liability will remain the product liability exposure. I don't see anything about the consumption lounge that really changes the product liability part all that meaningfully. I think that whether they're consuming on premises or consuming somewhere else, the same exposure exists there. So this is a premises event, really, for the most part. The sales figure will reflect sales that will ultimately be consumed in the consumption lounge. I don't think any of these operators are really looking at this as something that's going to really drive sales for the next 5 years or so. So we're not too concerned about, that part of it. Sales are going to be sales. We're still going to charge our premises and product liability on sales. Where we might depart here is making some type of a charge based on square footage, or maybe it's even a flat charge that we make that addresses the existence of a place where people are gathering on the insured's premises. And one thing we don't want to do, though, is we don't want to make it a separate auditable event as well. We want to keep this as simple as possible. One of the interesting things about something new, though, right, is I'm reminded of that famous line from Mike Tyson that goes something like this: everybody has a plan until you get smashed in the face, right? And so, we have a plan, but we're going to also be open enough to see how it goes and reassess and reposition and adapt and what have you. And the thing that makes that interesting, that part necessary, I should say, and interesting, is that, we are in how many different jurisdictions? If each state just had like one state rule, one state law, one state regulation, or what have you, that would be great, but still complex. On the other hand, you've got a county, you've got a city, you've got a village, you've got local jurisdictions that may or may not insert their own regulations layered on top of something the state is doing or what have you. And so through all of this, we would ask our agents and brokers to whatever you can do to kind of help us, help you, help your insureds navigate the various jurisdictional wants and desires. What we want to do is respond, and we want to offer the very broadest coverage that we possibly can. And the asterisk there is depending on what the jurisdiction demands or creates as an exposure that is something that insurance would have to respond to or whatever. But we want to be as big a player in this area as we possibly can. And so that's our plan. Our plan is to head out there, start getting it done, and then review, adapt, modify, move on, as the case may be. But we can't do it without you, our partners, and keeping us informed as if there's anything locally that we would need to be concerned about. Obviously, this is not something that's going to be enacted in all states everywhere that have some type of adult use in the state or what have you. Where I am here in Ohio, we're surrounded by Michigan and Pennsylvania and to the east, Maryland, Massachusetts. These are states that are going to obviously go before a medical only state, but it wouldn't be far-fetched to think that once Ohio gets around to adult use that they say, hey, we're gonna put the consumption lounges along with it. So I guess to sum up before I get to the real meat of the conversation here is we look at this as a premises driven event, and we're going to price it fairly and easily and clearly for the insured. We don't see this as something that is too onerous as far as exposures go. Even if they add in some kind of a food menu, even if it's heavy food, even if it's a juice bar or something like that, we feel that that's something that we can handle. Look, the insurance industry, we're really not inventing too many new exposures, right? And so we just need to go back to what it is we know about most of the exposures, and then overlay a little bit of logic when it comes to dealing with the marijuana aspect. The real tricky part, I've tried not to use the term tricky lately, but here we are, days after Halloween, and I'm using tricky to describe the exposure of once a patron leaves the premises, then what? That's the part that I suppose none of us really know. We could probably look at the local and the statewide rules and regulations and make a pretty good guess. We could look at how states treat the alcohol thing and what have you, and maybe draw some conclusions or whatever. But this is one area where we're not going to know until something maybe happens or what have you. So I think we're all of us, all my colleagues across the underwriting spectrum here in this space. The big question is, somebody leaves the premises after consuming. Is there anything that might come back to the lounge owner for anything that might happen afterwards? Obviously, the alcohol side of that question is pretty well known, I think. What's going to happen in this particular situation? So we plan on having a response to that as well. I think that it's not something that is a deal stopper at all, but it'll be measured, I'm sure, but meaningful. That's probably the only thing that's out there wanting an answer, and it'll be interesting to see how that plays out. And we plan to be there in a front row, making sure that we know all we can. So that's really it. Consumption, to sum up, consumption lounges, all for it. Let's do it. Send us information. We probably will roll out a supplemental app to gather that information. That's probably something that we will all do, all of us markets that are in this. But we ask that you be patient with us, help us along with whatever it is you're seeing in your local area, or what's being whispered as far as things that are being planned or whatever. We always like that too as well. So if there's anything else, again, it's we have yet to write the first coverage. So we are awaiting that. And once we get, a little bit of experience under our belt, I'm sure there will be other questions and other concerns and what have you that we will make sure that we are fully communicated. With that, I will turn it back to Jim for the next segment.
Thanks, Kieran. And I've got Nevada as one of my states to discuss. So I kept that one to myself. And as we flip to the next screen, Grace, thank you. What I thought I would do briefly here is just to pick up a handful of states and have a quick discussion on what's happening kind of across the country. I cherry picked the states that I'm going to speak on just to give an insight or two on what we're seeing or what we're hearing from the overall marketplace. But first is the 5 states that are on the ballot in the 2022 midterms or general election. And before I speak to those, didn't know if everyone knew that nearly 75% of the United States, in terms of the states, not so much the population, has some form of cannabis, whether it's adult use or medical. And while that's a pretty big number, even in the face of a lack of federal legalization, we also know that's going to grow because we have 5 states on the ballot. And I'm going to be optimistic and say that all 5 have a legit chance of passing. And there's specific reasons why each state has its own chance. And briefly here, I've mentioned that Arkansas is our first state on the list. And what they haven't done, interestingly, is not consider the expungement of criminal history, which is usually one of the first discussions that are happening in the cannabis space. In fact, Senator Schumer in New York has, I think even today, tried to reinstill a bill that speaks to expungement across the federal perspective of criminal history. Arkansas is not doing it at the state level, so it's kind of interesting there. But if it passes, and it's expected to pass because there's more than 50% support right now of likely voters from a survey or a poll that was just done about 3 or 4 days ago, it looks like Arkansas will be the first deep South state to pass adult use cannabis. So fingers crossed. We know it's a pretty active medical state now. And then same thing is looking at the state of Maryland. So what they have done is consistent with Schumer, is looking to expunge criminal history. And the last poll I saw, which was within a week now, says 73% of the likely voters in Maryland would pass. So I'm saying that's a 99% chance that Maryland passes an adult use law. Who's to say that this is accurate, but it is to say that you look at polling data, get a sense for which way the winds are blowing and to see what happens. But what's interesting on our next state in Missouri is that there's been a lot of recent opposition. So the trade winds are blowing against the passage of Missouri's adult use. Don't know why. Could just be the political support or lack thereof in the state. Again, I'm going to go optimistic and say it's going to pass. But right now, people are saying, as you're talking to people in Missouri and those who do the polling and those that are just speaking, whether it's MoCan trade organization out there or others that have a vested interest, that could go either way. And it just depends on who shows up to the ballot box. North Dakota, interesting story. They've failed more than once in the discussion of cannabis. And of course, they're going again at it this year, 2022, but they made some very specific changes this year in their ballot initiative sponsored by the Marijuana Project. And what they did was to make sure there was more stringent laws in terms of consumer protection and more oversight from the regulatory folk to give the North Dakotans a bit more confidence in their legislature that it'll be overseen strongly. And they also said they're going to have a very limited launch. So I think I saw something like maybe 7 to 10 licenses for cultivation and another doubling of that for dispensaries. So it looks like it's going to be a much more limited launch than, let's say, a state of Oklahoma, who had a lot of licenses that were issued almost right off the bat. So different perspective in North Dakota because they want to get it passed, but they're happy to do it in a very narrow perspective of how the industry itself will be supported by lack of licenses. And then for those who are following South Dakota, you've seen that in the last election, they tried to pass both medical and adult use cannabis, and both passed. And then the fact that the state Supreme Court said you can't do both at the same time, it was shot down for adult use, and they brought it back for this year's ballot initiative. And yet, interesting, they're only considering possession and home cultivation. So it's not really going to be as robust of an adult use operation that they even passed last election. So we're going to keep our eyes out and eyes open on South Dakota, what happens in this year's election. If I can move to the next one, please. I wanted to grab a couple of recent states and what's happening today. For those who are in the Northeast, excuse me, the New England area, even though Maine passed a law 6 years ago, they finally got it ready to go in late 2020. So they had a 4-year waiting period. And what happened in that time frame was, you would say that pent up demand was happening. And once they got it going in 2021, they've had exponential sales increases. And they're looking this year, 2022, to surpass the 100 million mark, which is pretty strong. But if you think about what they're talking about in New York State, they believe in their first full 12 months of operations in adult use cannabis, their sales are expected to be $1 billion. So Maine's hot, but it's only going to be a tenth of the size of New York when things start rolling in both. So quite interesting. And not to say that I skipped Mississippi, but I'll keep on that New York perspective. New York's on my mind. It's a New York state of mind. Their Cannabis Control Board, interestingly, just banned vertical integration. They've been struggling to figure out exactly how they're going to launch cannabis, even though the law was passed in 2020. Lots of starts and stops. They've had a brutal Cannabis Control Board turnover. While the governors, plural, have been on board with this, first under Cuomo and now under Hochul, they've had support, but they're not getting any movement in the regulatory side. And the last step was putting some guidance out to ban vertical integration. They don't really want it to become a state of just MSOs, which is interesting. So they've always had a very strong proponent of social equity. And you can see here that they've identified the first 150 locations that will be social equity applicant only. So that's kind of interesting that like Arizona has failed to really get a good social equity movement, even though it's in their law too. So New York is pushing strong for that. If things go well, they're going to open up this year. They do have licenses that are about to be approved, but it's been slow to go in New York, and that's been a shame. Compare that to Mississippi real quick. Mississippi just had a wave of a pen from the governor. They decriminalized it, and then they launched medical marijuana pretty much at the governor's desk. It wasn't even a ballot initiative, and it's buzzing in Mississippi. A lot of activity. And all of these states who are having all this activity is the perfect reason why we have Nate here today to talk about builder's risk, because there's true movement in the state in terms of buying buildings, renovations, ground up construction. So we're really excited to have Nate when I introduce him in a short while here, when I finish up my spot. But there's a lot of activity, legitimate movement in the cannabis space, both adult and medical sides of our organization or our industry. And it's fun to see all that activity. And then speaking of, New Jersey has really pushed hard for a two-step process. The first one was these conditional licenses. And then the next step, once you received your conditional license, was to get the full approval. And as my slide says, there's 18 that have been approved. We've seen some interesting supply chain issues being buzzed about because they were concerned about a lack of cultivation spots. That's changing. thankfully in New Jersey. So now you're starting to see the grow catch up with the anticipated supply. All that being said, union, who would have thought union was going to be a conversation in the cannabis space? So we've seen Curaleaf had a couple of their adult use stores go unionized by the United Food and Commercial Workers Union, which is also true in Illinois and Massachusetts. And clearly it's a trend. I'm not sure I anticipated that, but you are seeing the unions take hold of the retail operations in the cannabis space so far. Next. Couple more. New Mexico. What was interesting there is it's been just the first 2 months it took for the medical sales to be surpassed by adult use sales. Usually that transition is over the first 4 to 6 months, like we kind of saw in Arizona, but New Mexico was clearly ready to be supported in terms of adult use cannabis. So the residents there had that pent up demand, moved quite quickly away from the medical cards into adult use sales. So New Mexico has done quite well, but it's a state like Oklahoma where there's a lot of smaller operators. Virginia's been a struggle. I don't know if anybody in the audience in Virginia, they had great legislation that passed for recreational use, but it's been paused because of the change in the leadership in the state. And right now people in Virginia are thinking that it's going to be paused for quite some time. It's not a priority for Governor Yoakum, however you say his name, and it may not be until 2024 until there's a real discussion that kicks back in for Virginia cannabis. Flip flop on the difference in Vermont. Vermont is doing very well. They've had a tremendous amount of record-breaking months. The first 2 were well beyond anticipation. And so adult use sales are very strong. And I picked up this little tidbit. Most of the retail operations, the clerks there are called bud tenders, but Vermont's going a bit more to the higher end perspective, and they're calling anyone who's in the retail space their concierge staff. So I thought that was an interesting way of looking at the people supporting the consumers out there. You're going to meet your concierge to have a recreational cannabis discussion in the stores of Vermont. So I thought that was kind of cute. Next slide. We're going to move into some of the, go back one, please, into the OG states. I mentioned Nevada as in the Kieran slide. And Nevada, they have launched a new state law for consumption lounges. And that consumption lounge law is fascinating because they're having in the dispensary, you're not going to be able to buy dispensary products to the consumption lounge. The consumption lounge itself is going to have to be its own dispensary, and it's going to be single use product. So you can't just assume you can go grab a 6-pack of pre-rolls and just walk into the consumption lounge in Nevada. Their law is very clear that you have to buy on premise, consume on premise, and leave without anything post on premise. So you're basically buying one gummy or one pre-roll, consuming on the spot, and then exiting with your pockets empty. So that's their way of tackling consumption lounges in Nevada. And that's happening very, very soon. The laws are passed. The question is, how quickly will they get on their licensing kick and approvals, and then the launch of actual construction, which Nate's going to speak of in a second here, because it's all going to be new build out. They have to be a separate facility. So that'll be quite interesting. Ohio, I didn't have it on my list here, but they just issued 120 new dispensary licenses, which are moving quite fast in the state of Ohio, which is our home base of business, the headquarters of Cannasure. So Ohio is having a tremendous amount of success as an OG state in terms of new dispensaries, new retail activity. Moving to Colorado, the first OG state, huge recall from unsafe levels of yeast and mold. So the testing labs are catching bad product. The recall in this case was governmental. So it was an action by, I think it was the city of Denver. They That would trigger the product recall coverage for most GL carriers. Some of us, like Cannasure specifically, can be a voluntary recall if you feel that your product was unsafe going onto the shelves, and felt that once you figured out your batch was bad, you could just grab it off the shelves and trigger the reimbursement, the withdrawal reimbursement expense of product recall in the cannabis policy of Cannasures. But others do require that governmental recall. And in this case, in Colorado, it just happened to be so. And then another discussion that was interesting in Colorado is that there used to be a barrier for any non-US citizen or resident to have a cannabis license. And Denver as a city is the first to remove that barrier. So you do not have to be a United States resident to own a cannabis company in the city of Denver, Colorado. That's kind of fascinating. Washington State, I saw an article recently about retail robberies are on the rise. So I'm putting out a little bit of a hello out there to those agents who can be opportunistically selling crime policies to the cannabis community. And we've had a great meeting yesterday with Berkeley Crimes operation, and they're looking to do a lot more with us specifically in the cannabis space. So hopefully, shout out to our Berkeley underwriting friends, that we'll see some activity from our agents who are on our webinar today because of the reality of a lot of these smash and grabs. Washington State's been bad. California hasn't been any better. Moving on to California, consumption lounges here are a big story. They've been opening up in some of the big cities, and even the Central Valley and the desert are looking to approve new cannabis lounge licenses going forward. That's kind of fun. So it's on par with Nevada. Oklahoma, interestingly, decided after maybe some of the buzz coming from the insurance industry that there was way too many licenses being issued. They put a 2-year moratorium on the issuance of new licenses. And they're doing that because they want to really clean up the business compliance, and they really want to slow down all the illicit marketplace activity. So the regulators are realizing that they probably opened up a can of worms by issuing way too many licenses. So they want to slow that down. And then finally, speaking on Massachusetts, they have enacted some legislation to reform some lower barriers of entry to make it easier for small businesses and minority-owned businesses to have a chance to operate in the cannabis space. Massachusetts historically has been dominated by bigger businesses with bigger pocketbooks and checkbooks and and equity capital. So that's changing by law, which is pretty cool. And they think that because the expectation, kind of as Kieran set up for us, how consumption lounges will probably more of a destination, but not a big sales driver. They expect consumption lounges to get jump-started by this lower barrier of entry in the state of Massachusetts, and as well as to reduce some of the local fees that have been put on some of these licenses that will allow the smaller business owner to launch a business in the cannabis marketplace in Massachusetts. So it's cool, after 3 or 4 years, the regulators are trying to look backwards at what's been happening and to make changes in their cannabis laws. I believe the next one is the introduction to Nathan Gunn, and he'll share with us his story on builder's risk from Great American Insurance Company, what he's been seeing in the cannabis space, and sharing limits and coverages. And take it away, Mr. Gunn.
Thank you, Jim. Appreciate that. So yeah, as Jim mentioned, my name is Nathan Gunn. I work with Great American Insurance Company. For those that don't know, we're actually based out of Cincinnati, Ohio. Go Bengals. Quick kind of background on the company. So we're a property and casualty carrier, but we're a bit unique in that we have, I think it's up to like 35 different divisions now, and each of our divisions kind of specializes in either a line of business or coverages, or perhaps like a specific industry. And so we're all kind of operating independently of one another. We don't really interact too much from that perspective. So my group, I'm part of the property and inland marine division. And as you might guess, most of what we focus on is property and inland marine lines. So I'm part of the Midwest region. So I handle the states of Ohio, Kentucky, Indiana, and Michigan. And essentially my role on the team is I handle all of our agency relationships. And then I'm also the primary large account underwriter for all of our agents in those states. So that's kind of how we got in touch with Cannasure, obviously them being located in Cleveland. And so with that, one of the probably the largest areas that we focus on within the inland marine space is in the construction industry in general. And so, we write a fair amount of contractors equipment, installation floaters, things like that. And then our largest line in that space is definitely the builder's risk. So yeah, Jim had approached us, I think it was earlier this year, I believe, and we kind of had conversations about whether we would be a market for cannabis related operations during the actual construction period. So we had some internal discussions going back and forth with that, and kind of the general consensus that we reached was, is there really any difference, whether they're going to grow tomatoes or cannabis at the end, is there really any kind of difference in exposure to us during that construction period? And so we were able to get the buy-in and get the okay that, yeah, there's not really that big of a difference between that. So we were able to move forward and appoint Cannasure, and we've been able to look at builder's risk opportunities for them ever since. So with that, I'm going to just kind of go through a little bit of our appetite, discuss some of our limitations and whatnot, and then I think most importantly, kind of lay out the underwriting information that we need to see on our end in order to evaluate a risk. So yeah, to get started, the target kind of operations. I wish I had known Kieran's talk already. I would have added consumption lounges to this list. I didn't know that was a thing. So but yeah, so, retail locations, dispensaries, even all the way up to like a full-blown cultivation center, we can consider all of those during the builder's risk, during the construction of those. So kind of the different types of construction projects that we're open to, it's basically the whole gambit of, whether it's a new construction, so they're building a brand new building from the ground up, we'd love to see those. And then kind of the two different scenarios for renovation projects, one of them covering just the new work. So, if the insured is maybe doesn't own the building, but they're just going to be moving into a portion of it. And so they wouldn't need us to cover the existing, they would just need us to cover the actual build out itself. And then obviously in the situation where maybe they've purchased the building and they actually own that building, and so they need us to cover the existing structure as well. So we can consider any of the above scenarios. So Grace, you can go to the next slide. So we do have some limitations, and most of these kind of stem from the fact that we are not a market for the finished property operations, that kind of doesn't really fit our appetite. We're really trying to focus just on the actual construction period. And so with that, we have a few limitations. So obviously permission to occupy, since we're not wanting from a property standpoint to be on an actual operational facility. We typically won't be able to offer permission to occupy. And kind of along that same line, risks with existing operations already on site. So let's say that they have an operation that's already in the works, and maybe they're just trying to add on an addition to that building or something. Unfortunately, because that existing operation is there, that would be a deal breaker for us. And then the business income side of it, kind of the same thing. We don't want to cover the income generated from this business as part of the builder's risk, since we're not looking to do that from a property standpoint. And then the only other one, equipment breakdown, I listed that. So, we partner with a Hartford steam boiler on the equipment breakdown piece. And so those are going to be a little bit more challenging. Obviously, if it's just a retail dispensary operation, that's probably not out of the question. We should be able to add that, but obviously when you get into more of the big cultivation centers, more processing equipment and whatnot, that might just trigger a referral on our end. So I thought it was worth mentioning here. Next slide, Grace. Okay, so in terms of the required information, so this is going to be on all accounts. This is the information that we would want to see, whether that's new construction, renovation, what have you. So in terms of an application, obviously, Great American, we have applications available. So certainly reach out to your contact at Cannasure, and we'll make sure that they have those to provide to you guys. But we're also happy to work off of other carriers' apps if you already have something filled out. You know, we're not going to make you duplicate all of that work all over again. So, but in terms of the application info that we're going to be looking for, you know, named insured and mailing address, mostly just to get it logged and launched into our system and whatnot. The policy term that they need, so how long is that construction project expected to last? Limits and deductibles. Construction type of the buildings, obviously a huge factor, since that's going to play a big part in pricing and whether it fits our appetite and whatnot. The intended use and occupancy upon completion. So we just want to know whether it is a dispensary or, you know, a cultivation center, that type of thing. Square footage and number of stories. And then security measures during construction. So if they're going to have any kind of fencing, lighting, cameras, you know, watchmen, sensors, all kinds of things out there now. So that'll just always help, you know, get us more comfortable with a risk potentially, depending on where it is and the specifics of that risk. So, and in terms of, in addition to the application, the big thing for us too is going to be the general contractor information. So we, from a builder's risk standpoint, especially, we really underwrite the contractor pretty closely. So we want to make sure that, you know, they're professional operation, they've got experience with this type of project in the past. Typically we can just get all of that off of if they have a website. So it's not, we just want to make sure that we're confirming who that GC is and that there's a licensed GC involved in the project. And then lastly, for every project, we'd like to get a copy of that construction budget. And that helps on numerous levels here, where number one, we want to make sure that their limits are in line. And then obviously everybody kind of, I feel like a lot of carriers define, you know, hard costs and soft costs a little bit differently. And so having that construction budget, we can make sure that the limits are allocated appropriately for our coverage form. Grace, next slide. So here, now we're getting into renovation specifically. So obviously a renovation has a little bit more exposure to it, just because you do have that existing building there, even if you're not covering it. So for all renovation projects, number one, that existing structure, we need to know whether they need the coverage on that or not. And if so, we want to know what limit they're requesting for it. And then we also want to know the purchase price and date of that building, since if they're just recently purchasing that building, and, you know, maybe they're, for whatever reason, requesting a different limit than that purchase price, we want to make sure we kind of understand what they're looking for and why they're doing that. And in the case where we are covering the existing structure, we're always going to need some kind of building condition or engineering report. I know they don't always, you know, not every project is going to have like a full-blown engineering report, depending, you know, if they're not doing structural work or anything, they might not have something like that, but typically they'll have at least some kind of building condition, appraisal document, something that we can kind of take a look at it and know that, yeah, that existing structure is in decent condition. It just needs to, you know, be updated or what have you. And so along with that, even if we're not covering the existing structure, it still presents a little bit of exposure to us. So these are the kind of the questions that we're going to ask on every risk for renovation projects. So is any structural work taking place? And if so, we'd like to get a detailed description of that work so that we understand what's involved and what they're doing and why. as well as getting the drawings associated with that, because we want to make sure, obviously, when they're doing structural alterations, that, you know, some kind of architect or engineer is involved and has put together the drawings that they can follow. Is the project taking place in the entire building or only a portion? And if only a portion, confirm the square footage of the renovation area. So this kind of goes back to that idea, you know, maybe they are, even if they're not looking for existing structure coverage, we'd like to know whether, you know, are they going to be the sole occupant of the whole building at the end of this, or are there going to be other occupants that potentially we might need to be on the lookout for during construction, which kind of leads to that last question. Will any portion of the building be occupied during construction? And if so, confirm the type of operation and percentage of building occupied. So this kind of goes, you know, obviously, if we're covering, especially when we're covering that existing structure, but even if you're not, if a portion of that building is, you know, the tenant next door to them is a fireworks manufacturer, something crazy like that, you know, we just want to know that ahead of time so that we can evaluate kind of the exposure that places on our project. Next slide. In terms of our capacity, so I've kind of broken it down between new construction versus the renovations with the existing structure. So the new construction would really apply as well to renovations where we're just covering the new work. So we kind of break it down by construction type. So wood frame, we have up to 7.5 million, joisted masonry up to 20 million. And then non-combustible, masonry non-combustible, modified fire resistive or fire resistive, we have up to 150 million capacity for that. And the only change when we're looking at renovations with the existing structure is really that wood frame capacity. We've got reinsurers and whatnot on the back end of all that stuff. So our capacity kind of drops quite a bit when we're looking at covering that existing structure. So it drops down to 3 million for wood frame. And so that's going to include the value of the existing, the new work, soft costs, pretty much everything. So next slide, Grace. So in terms of, I thought I'd end with kind of, you know, we do have some CAD exposures or geographical limitations sometimes, nothing to do with the cannabis related entities. It's just from our builder's risk appetite as a whole. So obviously convective storms, you know, out in like Oklahoma, Colorado, there's some wind hail events that make it tougher for us to get comfortable with sometimes. And then pretty much all coastal exposures, we're going to be looking at an X-wind situation if there's anything coastal. Next slide. And so this is kind of just a general earthquake map of the different counties that would be decline or border counties for us. So the ones in red, unfortunately, we wouldn't be able to offer any earthquake in those areas just due to the high hazard exposures there. And then in terms of, you know, other CAD exposures, obviously I know a lot of this industry is kind of taking hold out west and starting to move over the rest of the states and whatnot. So out west, obviously we have, you know, wildfire concerns potentially. So we will analyze all of that on our end once we get a submission in, and try to let you know quickly if it's something that we can't do for one of those reasons. So. But yeah, I think that was all that I had. So I'll flip it back to Jim here.
It's not all you got, Nate, because we got some questions for you.
That's right. Yeah.
But to the audience, we do intend to share all slides, and especially Nate's slide, because it really provides a lot of great information in terms of appetite and underwriting information. So that'll come out hopefully in the next 1 to 2 days to all. And in that, the reason why we asked you guys to use the Q&A section is that we can memorialize that and send out all the A's to the Q's that you sent in, of which Kieran's been busily tapping away, answering some questions live. And we've got 3 left for you, Mr. Gunn, if we can just get you here. First question from Jordan says, or asks, could a builder's risk be considered if the build is 75% complete?
Unfortunately not. So typically we're not going to jump on any kind of project midterm. So the general rule of thumb that I would say, at least for ground up new construction, is going to be, if the walls have started going up, if all they've done is site work and maybe foundations, we might be able to get comfortable with that. But once the walls kind of start going up, unfortunately, that's going to be a deal breaker for us.
Next question is builder's risk. Can you write short-term policies 3 or 6 months in length?
We can. Yep, absolutely. So yeah, we prefer to have the builder's risk policy reflect whatever that construction timeline is, right? So to avoid running into like extensions and things like that. But yeah, if they have a small, just little tenant build out that is only going to take 3 to 6 months, we're happy to do a shorter term policy for those.
Cool. Final question is, what if a retail operation that is operational now and they're building a separate manufacturing cultivation building at the same location? Does that count as existing operations when the buildings are separate?
Very good question. I think it's probably at that point going to come down to the distance between that existing building and then what they're building, the new one that they're building. So it's probably going to come down to a case by case basis on that, but I'm happy to, if you guys ever want me to look at anything and run it up the chain, I'm happy to do that. So.
Great. And then really finally, how do you want us to interact with you and our agents? Do you want to share your personal contact information, Nate, or do you want us to be the conduit to grab these questions and ease up your potential inbox?
Sure. Yeah. So I kind of left that off intentionally just because from our standpoint, we've got like a launch team that's going to take all the submissions in and launch them. And they've got like a list of our appointed agencies. And so if I send something that's not from Cannasure, I'm going to get a ton of questions from them. Oh, who should this be? Like, what's this going to be launched under? All of that. So, yeah, ideally run through your contact there at Cannasure, and then they'll get it to us. So
great. Okay, cool. So then to the audience, I'll share my information. If I haven't done so, we'll do that for sure in the reach out on the slides as well as the questions that were answered. I don't know if we have anything else live that we haven't tackled. So I think we are clear, or am I not seeing that?
Looks like we kind of got them all.
Yeah, I think so, Kieran. Thanks. So I guess with that, if there aren't any other questions, I will happily have us sign off. Thank you to Kieran O'Rourke and to Nathan Gunn for sharing their insights on their topics today. You'll see my contact information come out when we send out the slides, so you can always send me some questions post webinar on anything that's on your mind. But thanks to all of you guys for taking the time, hearing Cannassure's message, continuing to support us. You guys have been great with asking, what do we need to do to support you? And this webinar is one of those things that we're doing in that case. We can't do enough in our appreciation on sharing our content, asking the questions to make us a better organization. And it's solely because we get great support from our agents and brokers. So thanks to you all very sincerely. Signing out today. Looking forward to seeing everyone at MJ BizCon that might be going. Cannasure will be sitting at booth 2021 in Las Vegas, Nevada.